Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, so on to May, and what we're seeing is you're seeing some consolidation up here in and around 4,200. The bulls aren't ready to commit to being above and staying above 4,200. The bears are trying to defend it, but they never do a very good job of defending anything. What we saw last night or early this morning about 5:30 was about a 15 or 20 minute move back to the new weekly pivot, which is 41.8508, and that coincided with the hourly mid-band 41.86. They did it earlier right around Europe Open as well. So we've had a few looks at the low 80s that have held as support. We did 99.5, and what was this one? 98.75. So we're really kind of jammed this morning heading into the first open between weekly pivot / hourly mid-band and the round number 4,200. So that 15 handle zone is going to be really important today. And if they can take it out, if the bulls can take it out to the upside, then they can push up into that 42.11 area from Thursday. If the bears can take it down, they can challenge the pre-FOMC price and challenge the 9-day down around 41.75. But that's the zone that we have to deal with. So that's going to be important. Volume weighted average price comes in at 41.91.5. Proprietary moving average at 93. 5-minute mid-band 96. So if you're the bears, you convert that area. If you can convert weekly pivot, then you also have to come down and convert the 9-day. So what's the rule for when the bears are worth caring about? Okay, we've gone over this for months, but in case anybody's new or joining us today, here's the deal. Pick two lines on the chart that are important, at least important to us. In this case, getting into it here, it's going to be the weekly pivot in the 9-day. The bears need to convert those areas on a closing basis, close below them, and then exhibit some downside follow-through by staying below those lines for the entirety of the next Globex session. You do those two things, and then you get your move back to the daily mid-band, the 20-day simple, in and around 41.45, 41.50 area. If you don't do those things, then what you get is a lot of fireworks and a pretty cool short trade, but it's just a rental. It's a trade, and it's a dip, and it gets bought, and it goes back to and makes higher highs and makes a new all-time high, because that's how the S&P wants to roll right now. And if that's the way it wants to roll, that's the direction that you trade it in. Bottom line. Bottom line. So it's on the bears. It's always on the bears to perform. But as long as daily pivot at 83, weekly pivot at 85, hourly mid-band 86 and change, as long as that stuff continues to hold up, they're going to continue to push that envelope to the upside and try to convert 42.11. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. I'll see you guys tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.